Welcome to Charts This Week. My name is David Linton, I run Updata, and this week's edition for Monday the 4th of April comes to you from London. And we start as always by looking at crude. Crude prices falling back now, and this may well be the seasonal high. We see here the dollar correlation is negative. That means the dollar goes up, crude falls, and vice versa. And that's what we expect to see, a negative correlation between crude and the dollar. So that's quite key there. We see here on the cloud that we just did get through the cloud, and in fact on WTI we're actually just running down inside the cloud, and so there is some evidence that maybe we're just seeing a sell-off in line with the cloud. Last year we did get through the cloud, but it was fairly short-lived. It was around May time that prices peaked last year, and this seasonality has crept forward earlier and earlier every year. So we're tentatively bullish above the cloud, but we are falling back here, and the seasonality is a really powerful aspect of that. And if we look at the seasonal chart here, we see we're entering territory in April where, based on previous years, we start to fall away. So this may be as good as it gets for crude, this recovery into the sort of low 40s, and we're back now, of course, in the 30s. If we look at the 60-minute chart, we see here we're below the cloud, so that's bearish in the short term. Shift T will give you the trends and targets, 36.10 and 35.30. We're at 38.50 at the moment, so there's 6 to 8% downside based on this chart at the moment on crude. And we see here on WTI again below the cloud. These prices are all coming from Thomson Reuters Icon, by the way. Shift T, and here you see downside potential of around 6%. Notice how this target was given last week and met straight away this week. So these targets are very difficult to ignore when you see them being met like that. If you're trading crude in the short term or watching crude in the short term, check out the 1 minute chart. Here we see downside targets on the 1 minute chart on Brent, 37.10, 37.40, 37.40, about 3 to 4% downside. So we expect crude to have a pretty bad week this week in terms of the price. If we look at NatGas, US NatGas, below the cloud on the weekly, below the cloud on the daily. We did just recover there to about $2, but what's interesting is, and we're just holding above the cloud at the moment, but we really are struggling to get through the sort of 203 level. And of course the long-term picture is still very, very bearish. If you're trading NatGas short-term, Shift T on your charts will give you the trends and targets. There's a couple of downside targets to 197, not that exciting for NatGas. If we take a look at European gas, we see here MBP. This is the front month MBP contract, down this morning about 1.33%. The correlation here, this is the correlation between Brent. The Brent price is coming from Thomson Reuters Icon. The OTC price is coming off the Updata energy feed or your Trayport screen. And we see here prices have really dived away, so that's bearish for the price. In terms of the correlation has gone negative, and we are still very much below the cloud. So if oil's falling back, that's having an impact on gas prices. If we look at the 60-minute chart through this morning, so back into negative territory there. Shift T, this is, remember, your real-time OTC prices from the brokers. Shift T, 26.40, 25, 26, 25.65. So quite a bit of downside potential there on MBP. Of course, if you're trading MBP on the short-term chart, Shift T will give you the trends and targets, 25, all roads pointing back to this sort of 25 mark. TTF down this morning, down 1.7%, and if we take a look at the OTC prices for TTF, we see that we are very much heading into new lows here as well, down to 11.35 pence euro cents per therm. So really falling down here. 11.34, 11.45. These targets were given last month, and they're now being met. So price looking very bearish for TTF, and we see here on NCG and Gaspool similarly making new lows. So not a good week at all for European gas. If we look at German power down just under 1% this morning, down 2/3%, below the cloud on the daily, just above on the 60-minute chart. So we can actually see that we are getting a little bit of improvement in the price, but we are pulling back, of course. Gas having a much worse time than power at the moment, and we're seeing here 22.90, 22.65, 22.70. So that's quite interesting as well. If we look at German baseload, this is the 1-minute chart, again off your broker data, either on the Updata energy feed or your Trayport screen, and we're seeing downside potential, but we are just holding this upside target 23.50, so it may well just be that German power is just building a little bit of a base. UK baseload is bearish, both on the daily and on the 60-minute chart. Nordpool bullish on the quarterly chart, both on the daily and the 60-minute chart, climbing quite strongly there, and we do see potential of maybe up 8% upside if we can make new highs. If we take a look at Thomson Reuters icon currencies, these are coming in off icon. Remember your updated charts. Here we see the dollar index. Dollar's had a very bad few weeks. We see here that we're back below, but very much in the range. So it's too early to say that the dollar's collapsing. It has pulled back quite strongly, but we are in a still very big consolidation phase. A break to the upside or the break downside is what we really need to watch for. And if we look at the 60-minute chart, we see here how we've fallen through on the dollar index, and now just testing the cloud again. But lots of downside targets, about 2.5–3%. There's one even now that's been activated for 5% downside, so the dollar could be just pulling back there. Quite key that. Euro is of course therefore stronger because of the dollar, and we see here on the daily chart euro is recovering to about 114. This 117 level we saw back in August is really key for the euro to get a continued rise. And if we look at the 60-minute chart, here we see how small consolidation and then another big move. Shift T will give you the trends and targets, of course. 118, 117.20, 118.70, 118.20. So 118 is looking more and more likely at the moment. We've got multiple targets to that area, so looks like we will go back to test that August last year high. If we look at the 1-minute chart, this of course is very short term. Shift T will give you the trends and targets, and if we vary the box size, we see we've got a little bit of downside and some upside. If you're watching the euro currency closely, this is the chart to use, the 1-minute point and figure charts. If we look at sterling pulling back again, back into the low 140s against the dollar, and if we take a look at the targets on that, a bit of a mixed picture on sterling, because we have been chopping and changing. We're going into this consolidation phase, but at the moment the trend is down. And if we take a look at the 60-minute chart on euro, we see that actually the euro is really strengthening against the sterling. We're nudging sort of 15-month highs here. This is the 60-minute chart. How high will that go? That's at 80 at the moment. We see here we've got a target to 81.70. So that's number of pence per euro. If we look at the Norwegian krona, euro rising strongly against there as well. It's the Swissy, not much action, and sterling Swiss falling to new lows, 136. So sterling is weak against the Swiss currency. Take a look at stock markets. You start with the S&P 500. And I did a report for clients last week, a 13-page report on global stock markets, so hopefully you've received that. We see here on the weekly cloud, very interesting on the S&P 500, that we did move back below the cloud and we're now back above the cloud. But this dilly-dallying around the cloud is still a little bit worrying. It's encouraging that we're back above the cloud, but we've got to get through this 2100 level and hold that for a couple of weeks really to be confident that we're starting to break this pattern of a high, then a lower high, low, then a lower low. Classic Dow theory. Of course, if we start to pull back, then this comes through. This volatility after a good run is kind of what you expect, and we didn't go through the cloud in 2011, so this volatility and the trend is quite worrying, and of course we are heading into May. So at the moment we need to see the market closing above 2,100. It's slightly bullish because we're back above the cloud, but we need to be careful. And we see here on the daily we're through the cloud, and on the shorter term 60-minute chart we're through the cloud with still a nice trend building there. Of course, any fallback in the trend, and this is where we will start to see it first if we do pull back significantly. We still have the downside targets around 28% downside hanging over us. Lots of support though. And most interestingly, we had a downside target on this chart. Friday's close to 2072 on the S&P has negated that downside target, so that is quite a positive sign. If we take a look at the very short term, this is the 60-minute chart. We see here we've got upside targets to 2152, 2165, 2150. So if we get to that 2150 level, that does take us convincingly through the 2100. So there's about 3 or 4% upside there in the S&P 500. If we take a look at the Nasdaq, really key here, didn't ever go below the cloud, a very different shape from the S&P really, and we see here we're wandering back through on the cloud, no real downside targets to speak of, and an upside target of 6% and then around 2% on these, so that's quite key there as well. We take a look at the DAX. We see here on the DAX we're below the cloud on the weekly, below the cloud on the daily, and we are below the cloud on the 60 minutes. So the DAX is looking a little bit more bearish there, and we do have mixed targets. Downside target here of 3.7%, upside target here of around 15%. So quite a mixed picture, not as clear as we saw in the US markets. And if we take a look at the FTSE bearish below the weekly, but bullish above on the daily, unlike the DAX. 60-minute really in this range, just breaking back above at the moment. Looking like we might just break this downtrend on the FTSE. Downside target still of anywhere between 12 and 25%. That's consistent really with the US markets, but we are in a downtrend here. 14% upside on this chart, and that trend changing, so that's quite encouraging, but a mixed picture with the targets in either direction. If we take a look at Asian markets, we'll start with the Nikkei. Tokyo, in my report, I said this was one of the worst looking equity markets. Bearish on the weekly, bearish on the daily, bearish on the 60-minute. Downside target here of 17.7%. And we've got a downside trend, and same here. So looking a little bit bearish. No short-term downside targets clear at the moment, but it's a pretty messy looking market. If we take a look at China, of course China is the market that caused so much upset some months ago, and here we see we're just testing that weekly cloud. As I said in my report, China's got work to do. If we just wander out of this, we're into bearish territory. And this pattern here of a move down and a recovery and then a move lower is not a great picture. Daily chart, we're below the cloud. The 60-minute chart does look quite encouraging, and if we just break this level, then we might break sort of an ascending triangle pattern and get some movement to the upside. Here we see the downside targets. If we do make new lows in China, the market could halve from where we are now, so that's quite scary, but that's of course on the basis of new lows. And we do have an upside target of 17%, and we've got a mixed targets here to the upside, but again, if we break to new highs, 6% upside, so that's quite impressive. Take a look at the Indian market. India is still one of the better looking markets long term. You'll note that the upside target of 69% is still in place. The uptrend is still in place. We are below on the weekly, and we are still below on the daily, but that's looking like it's coming through, and above on the 60-minute chart. Upside target here not yet activated of 21%, and of course that is counter trend, but we are seeing a couple of percent upside here. India is still one of the better looking markets long term. And then if we look at the Australian market, this market really not looking great. Below on the weekly, still below on the daily, below on the 60-minute. We see here downside target of 18%, downtrends, And on the short-term charts, we see here downside potential of 4%, 7%, and 17%. So there's still quite a lot of pressure there, and the commodities-led Australian market, of course. That's it for this week. Until next week, happy charting. See you then.